Let's get into our big stories now. And there are calls on businesses to reduce the prices of their goods and services to keep, effect changes. And there's mounting pressure. And the latest to add his voice to that is President John Mahama, who has waded into the matter, appealing, I beg your pardon, to the business fraternity to do the needful and bring some relief to Ghanaians. Now, with the continuous appreciation of the cedi, the reduction of transport fares, and assurances from the Bank of Ghana, that's the central bank, that the cedi performance is not artificial, the question is, will the businesses yield to the president's call or keep being hesitant? Now, they've also given their reasons. We'll find out why. But joining me in the studio, Isaac Kofi Ajay. I was just telling him that I would let him do something. Ike, should I contemplate letting you?
Maybe the dollar should do that to the cedi now.
The dollar should do that to the cedi. But let me ask you a quick question. For those who may be quoting prices in dollars around this time, how would they probably be feeling? Would it be bleeding?
Well, bleeding heavily. I mean, if you're an economic agent, a rational one, you should know where you stay at the moment in terms of pricing your goods in dollars. It's no longer profitable at the moment because the cedi now has more value than the dollar in terms of what we are seeing in the first 4 months of the year. But Ben, I mean, two things that I picked from what you just said, whether the cedi's appreciation is artificial, right, and in terms of the calls for businesses to revise their prices, do we have the efficient and necessary or sufficient evidence to prove that things must go down, price of goods and services should be reduced? And that's what we are going to analyze on the Smart World right now for you to understand where we've come so far as a country. The cedi is not just performing magic against the dollar, but other trading currencies. And in fact, if you look at the three main trading currencies in the world, the cedi is really performing well against all three. So against the dollar, 28 plus appreciation. Against the British pounds, about 22%. And if you look at it on the side of the euro, 21% being the least there. But, I mean, 28%, very, very huge. And I'll show you a chart at the dying numbers of the presentation, and you see why this looks unprecedented in the last, decade, or let me say, since we did redenomination in 2007. But, I mean, have we been at this low before in terms of the exchange rate? Yes, the answer is yes. We've been as low as 9 cedis, 80 pesos in when the country actually started having its crisis. We've been around 9 cedis, 80 pesos. But what we saw was that around that time, it started somewhere November of 2023, ended somewhere January of 2024, and we saw the normal depreciation continue again. It was very sharp fall in 2023, but what we saw was that, I mean, this actually, went back to the normal trajectory. But this year, what you see is how steep the appreciation of the cedi is against the dollar. Now we are talking about some 10 cedis, 40 pesos, according to Bloomberg opening today. 10 cedis, 40 pesos, very, very significant. You see where we started the year with somewhere around 15 cedis to the dollar. So if you're talking about 10 cedis now, that tells you that the level of appreciation is very high. In fact, if you go to the next slide, that talks about where we were, looking at some of the factors so far. And definitely, you cannot start talking about the appreciation of the cedi currently without talking about gold. What we are saying is that this is an economy that we have actually revised the base indicators. And this is an economy actually now being backed by gold. Why? Because you see gold reflecting heavily in the growth rate of the country. You see gold reflected heavily in the export revenue of the country as well. So what you see is the total gold exports, where in the first 4 months of the year, and what you're seeing in 2025, definitely an outlier. That is why it's in red. First 4 months, we are getting some $5.2 billion from just gold exports. But usually the conversation is, it's not about the beautiful numbers we see or relate to gold export, but how much stays in the country, or how much does the Bank of Ghana get in a form of liquidity to support the cedi. That's a conversation we should be having, because if you look at this beautiful chart that I just showed you, talking about gold export, you may be saying, wow, then it means that the economy should be performing well. But I mean, you'll be disappointed to know that we've been doing well in terms of gold export, hovering around close to $2 billion every year, especially in the first 4 months of the year. And in the entire year, we are able to get sometimes close to $7 billion in a fiscal year. But this chart will tell you that the total amount of gold exported out of the country isn't the same as how much stays in the country to support the city. So you see this chart. What you see in red is the total gold exports, tracking it from 2014 to 2024. And what you see in blue is how much is surrendered to the Bank of Ghana to support the city or to meet the dollar demand in the country. A blue line, very, very low. And what you see is the widening gap. And Dr. Richmond Etiahene has been talking about this gaping hole. He says that if you are really serious about solving the country's fundamentals or putting the economy on a good pedestal, this is one of the things that we should be looking at. Somewhere 2014, 2015, you could see that asymptotic movement, very asymptotic in terms of how much we export out of the country and how much stays with the Bank of Ghana for forex export or for forex support. But the picture has been different from 2016, where what you see is that widening gap. If we can go back to that chart, the widening gap between how much leaves the country and how much stays in the country. And we have analyzed this data. We are asking the question, could this be one of the reasons why the government has decided to introduce the gold board, where it will act like cocoa board, where government will have majority control over, the export of, gold in the country, like the way we are having in terms of, cocoa. Now, if we're able to really get that, it means that we can actually take advantage of the booming gold exports. I mean, or the booming gold, markets in the global space, where just last year, if you look at the numbers in terms of gold exports, it was around $11.6 billion. But last 2 years, let's say 2023, we exported $6.6 billion worth of gold out of the country. But you will be disappointed that the total amount that stayed with the Bank of Ghana to support forex or to support dollar demand was a peanut. I mean, somewhere below $200 million. The question is, how do you as a country export close to $7 billion, and how much is surrendered to the Bank of Ghana or the central bank is below $200 million. And maybe there's a reason why government is really banging its hopes on gold, backing the economy with gold. And if you're seeing this chart on your screens right now, that should tell you that the previous, jubilations we've had about gold export didn't really have a lot of impact on the economy, because almost everything leaves the country and just peanuts stays in the country. Now, look at this. In terms of the first 4 months of 2025, we've spoken about this already in terms of cocoa. Cocoa used to be one of the commodities. In fact, it's the main backbone of the Ghanaian economy, because unlike gold and other commodities where we get less than 15% of whatever we export, cocoa, we can boldly say that about 90% of whatever we export comes into the coffers of the central, bank. But the story this year has been different. If you compare it to what we saw last year, where in the entire 2024, the total amount of cocoa export that we got was less than $2 billion. This year, we are not even, we're not even done with half of the year, and I can tell you that we've exported more than $1.84 billion of cocoa. Why? Because of the good prices we are seeing, and because prices rallied last year to as high as $10,000 per ton. We were able to take advantage of that, and now you can see that in the entire 12 months of 2024, 1.9 billion was exported, and in just 4 months, we are exporting close to the same thing in 2025. That tells you that something significant is also happening in the cocoa space, giving Bank of Ghana the needed forex to support the dollar demand. And
before you go there, I mean, there are a few things I'd like to bring. But on the cocoa bit, it's interesting because we have our syndicated situation, which also explains why last year, when prices rose, we couldn't really take advantage of them.
Because we locked in the price.
You've foresold and received money. So you can't, change the rates at any point in time. So what exactly is accounting for this? Is the syndicated loan still happening? What accounts for the difference?
Well, we remember that former Finance Minister Dr. Mohamed Amin Adam said that they wanted about $1.5 billion from the cocoa syndicated loan. But unfortunately, when they went to the market last year, somewhere September, they could not get the loan because of the high coupon rates. Remember last year we had deferred in terms of our cocoa beans commitment.
Right.
And traders were saying that just by trading with us, they had lost close to about $1.4 billion just by trading with Ghana.
Right.
And so they wanted high coupons or high interest rates. So we could not go through with the cocoa syndicated loan. So currently, what we are doing in terms of, on a bigger scale, is to sell the cocoa on the spot market. That tells you we are able to take higher prices compared to what we locked in last year, somewhere around between $2,000 to $3,000 per ton, where prices rose to about $10,000, and we couldn't take advantage of that. The story is different this year, where you export less, you're still able to get more. So that's what's happening in the cocoa space.
It also tells us something, which is the point I'm trying to drive home, that this syndicated loan thing, it was meant at the start to be a stopgap measure.
Yeah.
It became the norm. Of course, in every trading, whether it's gold, oil, cocoa, there are times where there will be a boom.
Absolutely.
And there will be, at other times, there will be a bust. And you must, if you do things right, you may be able to weather the storm and cash out when need be. But the other thing we need to take stock of is that on the back of increased production and all of that, cocoa prices are beginning to fall.
Yes, cocoa prices are falling. But if you were getting $2,000 per ton last year and prices went as high as $10,000, $11,000, and they're falling to about $8,000 or $7,000, you're still cashing in, right?
You've cashed out.
Absolutely. I mean, this is the big difference there that we are seeing. And with this, chart, what you see is that in the entire 2025, our total export in terms of the first 4 months of the year was somewhere around, 2024 was 5.8 billion. And you can see the average in the first 4 months is usually around $5.7 billion. But this year, something significant or something different is happening where we've been able to get some 9.33 billion from our entire exports, right? And just cocoa alone, or just gold alone, in 4 months is able to give us how much we got from the entire exports in the first 4 months of 2024. So that tells you that
that's also on the back of increased
prices,
prices and our exports.
And our exports. Well. And I made a point that hitherto we used to export the gold and just a little stays with the Bank of Ghana. But with the introduction of gold board, the ambition or the aim is that governments should be able to take control of that market. Government should be the one exporting the gold and getting the forex to give to Bank of Ghana. So what is happening in terms of how the cedi is stabilizing is a simple demand and supply situation where demand is still there. People forget. It's not that we are not importing. People are still importing, but Bank of Ghana is able to meet the demand. And when that happens, it renders the black market useless. Because if you go to the Bank of Ghana, if you go to the banks, you're able to get the dollar. So why do you have to go to the black market to get at a higher price? And that has been the conversation. So you can see that the current exchange rate we are seeing is backed by gold export. And government is taking control over the export, where even we've been having conversation about our reserves and people are saying that it could be the reserve. But I always say that reserves build confidence. No country actually uses their reserves to actually show up their cedi. It's only in a critical situation where you burn your reserve to save your currency. But when your currency is really performing well, you put your reserves. That's why they are called reserves. You're not supposed to be touching them. But at this point, in terms of being under the IMF program, we're able to build reserves as high as almost 5 months of import cover. Right. That means the Bank of Ghana can now get the free space to come into the market and to do some of these interventions.
And we know that, there have been times, I'll come back to you, there have been times where import cover has been hovered around 1 month, 2 months.
Even below 1 month.
If we're getting close to 5 months, that's monumental. So walk us through the rest of what we ought to be looking at. I see fuel prices there as well.
Yeah, before we even go to that, I've always said that the markets women, they also have their own data. They may not have it in Excel.
They have their data.
They may not have it in Excel. They may not plot graphs, but they have their own data that they work with. And until these data make sense to them, it will be very difficult for them to actually reduce price. You can actually see a cocktail of factors. People even speak about factors that we cannot even quantify, all of those things involved here. But one thing we can tell you is that one major factor that drives price down which is fuel prices, has been on a nosedive, and you can see that significant improvement. And we're actually projecting that in the next month or in the next window, we should see prices coming down to about 12 cedis or 11 cedis per litre. That will be good for the economy. Also, one indicator, which is the inflation, and we understand that the Bank of Ghana has decided to maintain the monetary policy rate. But if you go to the lending rate,
28% also.
Lending rates has actually been reduced compared to 2 years ago, a year ago. All of those things are key factors that are supposed to drive prices down. Now, for me, this is my final graph that I'll show you. Confidence in the Ghanaian economy. And you can see it's up there, 103.6. That is the index we are seeing right now. It used to be around 81. That was very low. Both business and consumer confidence in the economy really, really high. And why are we seeing this? Because of the improved reserves we have seen and the kind of initiatives that the current government is running. And also, we shouldn't forget that we are under an IMF program. We've come through this for a number of years. It's been years of consistent, rebuilding of the economy through the 3-year ECF program that we have with the IMF. And one of the targets was to get the economy running on this kind of wheels again, and then also get the debt, servicing agreement or the debt servicing obligation also coming down. And for me, this is the reason why we are talking about price reduction, because if you look at this comparative analysis, you can see that in terms of Cedi appreciation in the first 135 days of every government since redenomination, what we are seeing this time around is unprecedented, where in 135 days, we are seeing appreciation close to about 19.4% of the Cedi against not any currency, but the dollar. When everything works well, all of these things should, play out, where consumers will have all of these things reduced in lower fuel prices, reduced transport fares, lower electricity tariffs, also declining inflation. All of these things are working now. But the most important thing is that
the two components in red.
Very important.
When all of these come through, you see higher consumption because people will have more purchasing power.
Exactly.
And reduced pressure on the fiscal.
Both government and consumers as well. So we are on a very good trajectory. And I'm sure that the conversation should now be on how to consolidate the kind of gains we have now.
Consolidating the gains. Isaac Kofi, our man on the beat. I call him our in-house government statistician. He's the governor here as well. Isaac Kofi, thank you very much. Let's come into